Good evening, everyone. This is Anne Marie. It is Thursday, March the 7th. I know it's only been a few days since we did our last report, but a lot has happened, a lot. And I've talked to us quite a bit and extensively about what we need to do when we start seeing formations like the ones we started seeing on the daily area and ending up giving us these regions where we look at support and resistance coming into play over and over and over again without us heading higher. That is always a warning signal. And if you just came in today looking at what the system did, really it triggered the short action yesterday. Here we are with today. We've got a contract roll. This is a composite chart for everything, but you might be looking at it going, wow, that was my resistance area all the way up here. I'm well below my zone. What do I look for? One of the most important things for us to remember is when we are looking at charts that have upward draft and we begin to break support, we do not customarily fall like a stone. What we do is we come into frontline support, and so we can see that frontline support right here at our old levels of resistance. That's old resistance that became support. Take a look at that. It's a very, very good way to add back to your long action or to stay long once it recovers this area. It gave us resistance. That resistance is now giving us a sell zone, okay? And so here's the great thing. You're never going to see a sell zone unless you've had a resistance zone show up first. And so it always gives you that little heads up for you to look at. If you're saying, gosh, you know, I look at this all the time, is there a better way to move through this formation that I might have caught it a bit earlier? And you know, you could end up looking at something like, I don't know, a 10-hour. If you're chunking the market together, you might say, gosh, Emery, 10 hours. But this is what we have here. And what we have is a sell zone that gives us motion that says, hey, you know, I've got resistance. Here's my sell zone. So my failed retest is going to give me that bullish action. And so you can see the morning of the 6th gives us the breakdown action. And of course, where we are able to trade to at the first pass is our frontline support. That's where we're always going to if moving averages are upside, folks. We're never going to any place but support at the first pass. And we've just got to get very comfortable with the fact that that is how charts work in general. So what are we looking at now? What if you didn't get short? What if you weren't paying attention to it and then all of a sudden this hits you and you go, oh my gosh, what's happening? Well, the first thing that's happening is that we're coming in to test support. Support is going to be defined right here with our diamond patterns, old resistance, new support. So this area at around 27.29 is going to be the optimal region for us to take a bounce pass into old resistance, it would be new resistance, old support. So that is what I anticipate. We really have very oversold intraday motion, and so that's what we're going to be looking for in the ES. Whoops. Let's take a look at the YM. This, of course, is my system, Target Rich Trades. You can find it on Metastock. Great program, great support. Metastock is unmatched in terms of customer support, and they will help you understand how this works. Additionally, I do a video every week so that you can see where the broad market is. Notice NASDAQ, that was today. But the question is, where is the chart going? Remember, you always, when upside motion is present, that means you're near an upward moving average. The first place you're going to go to is prior defined support/resistance. And here it is right here. Could it be a little bit lower? Yes. Could it be a little bit higher? Yes. But this is the first place that buyers are going to try to force price back up. Where? Into prior resistance areas. You see this resistance zone right here? That's going to be the one to watch. And if we sit like this and bounce into this region and we cannot hold it, this is going to be a continuation short. For somebody like me that trades in the intraday markets, I'm going to be looking at something along the 4-hour formation, and I'm going to see, well, wait a second. Here I am looking at my front line support and resistance, and I'm going to see, hey, can I bounce and move up into this region? If I start failing at 71.06 and I lose 71, I'm still under my moving averages. I've lost primary support zones. I'm going to start slipping down into my secondary support areas, which are around here. Listen, what do I think the markets are actually doing? I think the markets are in a very interesting reversion to the mean. And so what does that mean, right? Here is a very swift moving average, and then here is a moving average that is not quite so swift. It is just a little bit more shallow. And what this chart has done is move really rapidly to the upside over time, over the last little bit, and it's just rocketed. And now what we're doing is drifting into a mean reversion because the first 2 months of upside pressure are well outside the range of normal price behavior. Absolutely. And so what you're seeing is the chart action dipping into, here's our front line resistance, that's the next area up above that zone, somewhere around that region. If it gets to that area, which I doubt it will try again to reverse. But right now, my suspicion is it tries a weak bounce and then rotates back over. And so for the next 3 months or so, what we're actually going to see is this grinding sideways pattern that essentially looks at the entire year in terms of these formations right here. And they're going to be sideways and they're going to grind into general support. That's my supposition there. And that really has not been violated in any way by what it is that we are looking at this time, right? So if we take a look at the NASDAQ and it gives us this first sell zone and we've got bullish pressure, we know the first thing it's going to do is come into support. So do not sell here. That's not what this sell zone is telling you. It's telling you if you break this and then fail to retest it, it will confirm as a sell zone and that's where you'll sell. Right now it's saying, hey, this is a sell-off into support because my moving average is up. So you want to watch for the bounce that fails and gives you more downside action to enter into the trade. Notice how the last nasty sell-off in October looks. It doesn't look quite like this. What happens is we get the first sell and it comes into support. And then that support bounces and it gives us another support zone. This is what we are looking at essentially here. So we expect the fade and then a bounce. So it doubles up right here and then gives us a drift into our frontline support regions that are a bit lower and essentially sideways in terms of the year. All right, now let's take a look at the RTY. Don't normally look at this one, but this one really started selling off. Notice, here's the sell zone. So here's what it says. This is perfect to read. Here's my resistance. It's right up here at the relative highs. It breaks one leg higher, and then it gives us a sell zone. But here's the thing. What does that sell zone say? That sell zone says, I'm going to run into my frontline support. Where is that support? Well, it's right here, underneath all of those candlesticks. Right there at the 15, what number is that? Pardon me. 1573. Guess what it does? It bounces up into the resistance, and that is where the chart tells you you can start shorting. If it fails your level, which has been designated by the sell zone, if it fails the level, bounces and cannot retest, you know you've got a continuation short. Where's it going? Well, this is bullish, so it's going into my next area of support. And look at what we've got here. Old resistance, new support. That's what it's going to do right here on this edge. Guess what? From here, it's going to try and bounce again. If it doesn't, it'll slip into one more region of frontline support, and then it'll likely give you a little bounce. Here's the thing. If we have a sell zone here, and this is breaking down, and we fail this moving average, because this is bullish, it's still searching for support. Take a look at the last breakdown. All right? It's been bullish, bullish, bullish. It says sell zone, it comes into support, and then it bounces. Where does it bounce to? Resistance. And then it comes back to support. It gives us another sell zone, and where do we come back into? Support. It's only after we break down, fail the support in a test of support, that we can continue downward. That's how charts move over and over and over again. So right now, we're in this little bit of a bounce pattern, but this has rolled off quite significantly. Could it be the canary in the coal mine? Maybe. I'm not really sure why the Russell did this, the E-mini Russell did this, but it is a warning shot across the bow that bounces are going to fade if I cannot get up and stay up over my primary areas of support, which, you know, I like somewhere around 1530 to 1540 with the RTY. All right, next one we're going to look at is oil. Did we look at the NQ? Yes, we did. YM, that's the one we haven't looked at. Let's take a look at the YM. This one is also much weaker than the ES or the NQ. It's had sell zones from 4 days ago, right? It's starting the 5th day in the candlestick formation here. So what's it done? Notice, if I have a sell zone with bullish territory, it tells me, hey, I'm on the hunt for support. Where is it? There's my resistance / support. I've got this in my region. Wait, did I already do this? I have got a brain like a sieve, okay? Breaking down, we want to watch for the bounce action into the old sell zone. That's going to be around 26,000. Don't try to short here because this is in progress. Be patient and let the charts work off their oversold formations on tight areas. Take a look at where the stochastic momentum index is on this hourly chart. It's going to take a while to pop up, but look at where it is, way down here, -50. So it's given us tons of negative pressure. It's got to work that off in general and pop back up into this region and then fail that zero marker before we are sure that this chart has got any kind of downside on it. It's very, very good for a particular bounce here. Now, here's the thing. Could it not bounce? Of course. It could continue to go down, but because the price action is very bullish, all it's going to do is come down into the next line of daily / weekly support and begin to bounce. And you've got to be aware that those sorts of things happen in general. Let's take a look at oil. Oil is still sitting in a very sideways patch. Notice the change from bearish to bullish to neutral to bearish to bullish. That means that traders are fighting over what ought to happen here in oil. Here is my suspicion. Do you see how this is holding high? It's holding high. It's faded a bit, but in general, it is telling me any deep pullbacks that I see in this arena, that means all the oil things that I might be looking at, I'm going to find buyers and it's going to give me a bounce zone. Let's go to the weekly so we can identify what this actually looks like. When we take a look at the weekly chart, you're going to see the price action sitting clearly in bullish formations, but 2 weeks ago, we've got ourselves a resistance zone. And so that resistance zone came in. And if we take a look at this crosshair here and we put that line in the sand as that area, then we really have got to get up over this 58 region to feel comfortable that our chart is going to expand higher. Right now, we could see just weak bounces and then pullbacks, but you can clearly see, look at this, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks holding this region around 52. That is support. Another higher region of support at 55. That is support. Any kind of deep pullbacks into those areas will give us buying pressure for sure. Last one I want to take a look at is gold. Gold I've been very bullish on, except lately. And the reason for that is because the chart has stopped grinding higher. So here's what it did. Let's go to the weekly. It's got a sell zone on it for time being. It's just started with the bearish. The sell zone is all the way down here. But notice, where does a sell zone go when a moving average is up? What's the target for the sell zone? That target, that target is prior support. And so we're looking at a support action here, right around 1279 to 1280, and then a support action that is now resistance at 1295 to 1296. What should we be doing here, folks? We should be bouncing. This chart, it should be bouncing. Guess what? It's not bouncing. So if it should be bouncing, but it's not, what that means is that buying pressure is holding here, but they don't have enough to get up over the sellers. And this chart has moved a lot since its lows. So you want to be pretty careful about picking up any size in this space because it could easily bounce into the resistance zone and reverse. That's what it's been doing. And that reversal edge has been somewhere around 1288 to 1287. That's what we are looking at in the big picture. Use these indices to show you what your regular charts can be doing in the grand scheme. When you see resistance, you know the first thing you need to look at is, well, where's my last area of resistance? Because that is going to be my front line of support. If I cannot hold my front line of support, I'm going to go into the next support zone, which is going to be my old resistance levels, right? And that is really what this chart is doing. It is desperately trying to get up and over this area right here. And that is becoming very difficult for this chart. Easily, if we drew Fibonacci, easily we could end up coming down into this wave space right down here at the 1250 to 1260 area. So you've got to be very careful. Estimate risk, folks. It's a big deal to estimate risk. And right now, there are a lot of algorithms trying to force price to the south and shake out a lot of weak hands. If you go in and you say, hey, I'm buying this bounce, you better be ready to get out of that region as soon as the charts stop heading higher. And that means you're going to be looking at it in some very tight time frames. All right. Be careful. Good luck. And I'll see you next week.